Peace and profits, everybody. Coming with a quick video. Well, I'm not sure if it's going to be quick. So I always say quick video just out of habit, and it's never a quick video. So I'm going to go over some of the questions that I get in my DM. And I'm also going to request that when you have questions, drop them inside of the community so that when I answer your questions, other members can leverage those answers that you're getting. So if you have questions, definitely drop them inside of the community. Now, if you want me to review your charts and things like that, you can definitely send those through private message. But if you have a question that you think would benefit others, then I would appreciate it if you would ask those questions inside of the live chat. And so what I'm going to talk about is top-down analysis and how you can pinpoint your entries and your exits, because I'm always getting questions of what time frame should I be using, or what's the best time frames? And the answer is you need all of them. So I have up all time frames or several different time frames up on the screen so that you can look at them simultaneously. And so I'm going to do a top-down analysis to show you how you're basically doing an X-ray of the pair that you're actually trading to see what the market is doing, because the candlesticks do tell a story. And based on that information that you are provided, you're making an informed decision on if you should buy or sell. Now, the important part of trading is really having the confidence of trusting yourself when you make an analysis and being able to determine your loss and accept your loss before it even happens. So one of the things that I struggled with very early on in my journey was having this gambling mentality or mindset when it came to trading. Because I got introduced to this industry in network marketing, it was very hard for me to really decipher the difference between the gambling aspect and really becoming an informed, profitable investor, because that's the end goal with what I'm teaching you in this community, is for you to learn how to master technical analysis and eventually pivot into long-term investments, stocks, annuities, different things that can actually create generational wealth for you and your family. Now, trading, day trading, that is everyday money. That is money that you can show up and get every single day, but the skill set is transferable. When you actually learn how to master these charts and look at a certain financial instrument and be able to determine and predict, or not necessarily predict, but actually make an informed decision on which direction the market is going to go, then you put yourself in a situation where, money will not be an issue. You will be able to write your own paychecks and own your time. And so that is why I'm so passionate about chart mastery and providing a prestige and a high quality mentorship program for those that are ready to take these steps to really investing into themselves and really taking their trading and their understanding of the markets to the next level. And so, I wanted to make this information actually accessible to anybody that is ready to hone in on the skill and make it a priority. And so that is the reason why I do the 30 days for free, because I know that there are a lot of programs out there and you are just shooting in the dark and you don't know what you're getting until you've taken that leap of faith and invested your last. And then oftentimes you're actually disappointed with the level of information that is provided, or it just does not meet the expectation that you had for the information. Or a lot of times people are just lazy and they don't even, you know, take the information and consume it. And so that's a whole different story. But, you know, I just want to create a different standard. And I'm so confident on the level of information that I provide that I can give it to you for free for 30 days. And I want to create a space where you get access for 30 days. And then once you haven't taken access, haven't taken action, and you lose that access, you're actually yearning for that information or that community again. And so that is why I, you know, do things the way that I do. Is I want to give you access to a community that is going to be something that is impactful and that is, you know, some information that you can actually grow from and use long term. And so let's hop right in. First things first, I am on Euro USD because this is typically the pair that most novice traders start out with. It is the most traded pair when it comes to the foreign exchange market. So we're just going to start there. And so the software that I'm using is TradingView.com. You can start up a trial for TradingView. It is what most traders use in order to analyze the charts. So if you are brand new, this is a software that you will need access to in order to be able to make your trading decisions. And so we're going to be talking about top-down analysis and what that is. And if you've gone through my fundamental introductory lessons, then you've been introduced to the top-down analysis and how that works. But on this lesson, I want to go a little deeper into that and show you some of the things and tools and different analysis that I use in order to get the most sniper entries and how to not overtrade and catch swing moves without being a swing trader, because I'm a scalper, which that just basically means that I like to be in and out of a trade rather quickly instead of holding my trades overnight or over several days, which is intraday trading. So I'm kind of torn in between scalping and intraday trading, but for the most part, I'm a scalper. I like to be in and out. So first things first, and you don't have to have all of your charts on the chart at once. I'm just doing this just for the sake of this training so that you can see how all of the different charts actually coincide with each other to give you the bigger picture and help you actually make the best informed decision. And so what I like to do is, if it is the beginning of a new month, I like to look at the 3-month chart just to see where my highs and lows are, see which direction that the market is trending over a longer period of time. And as you can see, based on this chart, we are clearly in a downtrend on Euro USD. And so I make that initial analysis. I see that we have a double top here, which a double top. If you've gone through the Candlestick Trading Bible, you'll know that a double top typically means a change in character or a trend reversal. So when you see a double top forming, you are then looking for a break of the neckline. And then once you see that, you are looking for a downtrend. Or if you are looking at a double bottom, which is basically this at a in reverse, which typically is seen at the bottom of a downtrend. And that basically means that the market is reversing, and at the neckline, there will be a uptrend. And so the double top is just a reversal pattern that says that price is going to continue to the downside, which it did. This was each one of these candles, because I'm on a 3-month chart, represented 3 months. For 3 months after the neckline was broken, price trended down. And so we can see now for the 3 months after that, price trended up. And then this is the current 3 months that we are on now. So this is basically a quarterly chart. So we are at the beginning of a new quarter, and you can see that that 3-month candle is being formed. So what I would do is not really much on this chart. I will add a horizontal line on here. And as you can see, as I draw on one chart, this information is being transferred to those other time frames, because all of these time frames are working cohesively together. And so I put my horizontal line on there. I like to make that red, just so that I know that this is a higher time frame markup. I also add another horizontal line that basically gives me my boundaries, or what I'm going to be looking at for the most part. This is going to be the range that I know that I'm going to be staying in. And then a break of structure of this range is going to be a highly respected move, because this is happening on the higher time frames. So a lot of traders, when they're brand new, they'll end up on a 5-minute chart, and they'll wonder why their trades are not playing out the way that they expected. And the reason being is because they're not taking their higher time frame analysis into consideration. So now I'm going to go over to my daily chart. And so on the daily time frame, we can see that even though price has been in a downtrend, we are temporarily in an uptrend. And so this would be called a counter trend trade. And so now we are at a major key area, because that red line represents the top of that quarterly range that we identified on the quarterly chart. We are seeing some Doji candles, which, if you are familiar with the Doji candle from the Candlestick Trading Bible, you'll know that the Doji is a sign of indecision in the market, or also it is used as a sign that there is about to be a trend reversal or a change in character. So as we see for the last 2 days, because this is a daily time frame that we're on, price has been trending up. On this third day, there was a Doji candle that formed, which means that price opened and closed almost at the exact same price, which means that buyers and sellers of the market were basically in a game of tug of war, and neither one of them gained power over the other. So price typically closed and opened at the same level. So now this is current day price. So we are going to, for the most part, more than likely, we're going to be looking for price to come down and retest this area of support, which was created by this trend line. So trend line can go horizontal, or it can go in the form of a trend line. And so trend lines are definitely important when you see an area being respected multiple times. And so we're looking for either price to break above this major point of resistance, or we're looking for price to come down and respect this trend line. So we're having a temporary downtrend, or we're looking for a break of structure here that will continue down. Because remember, the overall trend is bearish, which basically means that the sellers have been in control of the market. And so we've established that we are temporarily in an uptrend. We're at a major point of resistance. So we are waiting to see what price is going to do. Is it going to break above this area here, or is it going to come down and retest this area of support and break below this trend line? And so what we can do now, we can go to our 4-hour time frame. And this is where I begin to identify support and resistance. And so our first major area is here. We see that price has struggled to break below this area, and it's also struggled to break this area, which is, again, our major resistance area. And so this is considered to be consolidation or a ranging market. You can definitely make money inside of a ranging market. If we take our measurement tool, we can see what this range is. This is about a 45 pip range. And so that's important to know when it comes to getting in and out of your trades, your stop loss and things like that. You want to make sure that you are getting in your trades in an area where your stop loss will make sense. And so we have our area of support and resistance on a 4-hour time frame. So we call this area areas of liquidity. These are areas where retail traders typically enter and exit their trades, and the banks and the institutional traders, they are aware of that. So sometimes they will manipulate the market to push price up, which is going to knock the traders out that have their buy limits here. That will knock them out of their trades, and then they will drive price into the opposite direction, and that's called a liquidity grab. So those areas in the market where you see a big spike or a large candlestick that breaks an area and then goes in the opposite direction, that is the market manipulation that's happening. And that is the reason why you want to make sure that you have a large enough stop loss that can actually account for those spikes in the market. But you want to make sure that you are using the proper lot size so that you're not blowing your account. And so we've identified our major support and resistance zone. And what I also like to do is look for the next area above and beneath that zone so that I know that the area that I'm targeting is more likely to be reached. So if price breaks and retests this zone, then I know that my target is going to be to this next area, which is 193 pips. And so you don't have to try to get or hold for the entire 193 pip range or 97 pip range or whatever the range is. You want to maybe only try to get 30 pips or whatever makes sense for your risk to reward ratio. So let's talk about your stop loss. So say for instance, my target is actually what am I trying to say? My buy order or my sell order actually is triggered. So I put in a sell order that if price comes below here, I want my trade to be activated and I want to target this area. So you're asking, okay, well, where would my stop loss be? So you're going to come over to get your short position tool. So my entry is going to be here. I'm going to drag this down to my target, even though I may not stay in the trade for that entire move, but my stop loss is going to be above this zone. And so that's about 65 pips to make 200. So that is a 3-to-1 risk to reward ratio, which is really good. But that is considered to be a swing trade. So that is for somebody who's looking to get into the trade once it reaches this area and hold that trade until those 200 pips are obtained. And most new traders don't have the discipline or the patience to wait for that to happen. Now, also what you want to take into consideration is this trend line that we actually drew. So price may not even come all the way down to this area. It may come to this area and it may retrace back up. So you want to keep that into consideration. And then also price has found support at this moving average. And so I would personally probably move my target up to around 106. Let's see. 106,000 or a little bit below that to keep it at least a 1-to-2 risk to reward ratio, which means that I am risking 65 pips in order to make 135. And so all of these things you want to take into consideration before executing your trade. And so that is a swing trade because this was established on a 4-hour time frame. So let's hop over to the 15-minute time frame, which is where the scalpers like to hang out. And so let's make this a little bit smaller so that we can see it on the 15-minute. So as scalpers, we want to get in and out of our positions. We don't want to wait for this entire trade to play out, although we do know that this play is possible. We want to get in and we want to take multiple trades and multiple profits on the way down. And we're still keeping in mind that price may reject this area and go back up once it reaches this area, or it may continue down and then scalp our way down to this final area that we've from this area to here. That's an additional 68 or 70 pips. So we're doing all of this analysis before we're hopping into the trade so that we can have a higher probability trade so that we can just make a better informed decision on the trades that we're getting into. And so, and we're also giving ourselves several different scenarios on how the market could actually play out. We're not marrying a trade. We're not saying that, oh, we know that price is going to come down to the trend line, then it's going to reject back up. We don't know what it's going to do, but we are giving ourselves several different scenarios on what could possibly happen. So let's look at what current price is doing. And let me lock this so it doesn't move around as I'm moving on the charts. So on the 15-minute chart, we're going to identify our support and resistance on this time frame as well. So we have this area and we have this area. So as you can see, as I drew this up on the 15-minute chart, you can now see it's over here on my 4-hour chart and where that is relative to what I'm looking at. So each chart is coexisting with the previous one that I looked at. And when you're flipping from chart to chart just on one time frame, it's kind of hard to bring that together. And that's the reason why I'm doing it this way, so that you can see how these charts actually work together. So on the 15-minute chart, we are still looking for a break of structure before we get in, but we're also taking into consideration on what we know based on those previous analysis that we did on the higher time frames. So we know that on the daily that we were at a major area of resistance, and that it's a possibility that price is going to reject that area, and we're going to have a temporary trade to the downside to possibly retest or even break the trend line that we established on the 4-hour time frame. And so now we are on the 15-minute time frame, and we are looking for our break of structure and our moves so that we can get into our trades in the direction that current price is currently moving. And so if we scale out, we can see that on the 15-minute chart, we are in consolidation. On the 4-hour chart, we are in consolidation. So it's probably not a good time for us to be hopping into trades. Now, you can trade inside of a range, but you have to be clear and know that it's just a temporary move. So we're waiting for price to break and retest either above this zone or below this zone. And so when price breaks above or below this zone, then our target is either let's see. Our target is either we can get 17 pips or 18 pips up. For scalpers, you want to try to get like 20 to 30 pips. I would say 25 to 50 pips scalping. 50 is really good. 25 is a good goal when you're scalping. And if we are scalping this down here, this is about 12 pips. So you have to keep that in mind if you entered in while we are in that range. The goal is to enter your trade after there has been a break of a major structure that we identify on the higher time frames, being this area here or this area here. So we could come over, add an alert here, which is going to send a notification to our phone to let us know when price has reached our area. So you're not just sitting on the charts, impatiently waiting and being tempted to hop into positions that are not going to yield any profits. So I've put my alerts above and below these major key areas where I initially identified on the higher time frames, but on the lower time frames, they're the same targets. And so this would be an aggressive trade that you can get in early. So you want to see price to break above or below these areas, and then you can target these zones that we identified on the higher time frames. And so me as a scalper, what I would do is if price breaks below this area, because we're in a downtrend, so I really want to trade with the trend. Price has shown that over the last several months, even the quarter, that price has been trending down. This on the daily time frame would have been considered to be a temporary retracement or a retest of a major zone. And so I want to get back in alignment with the overall major trend. And so I'm going to want to see price come down and break this area. And I'm back on the daily time frame, but I'm going to want to see price come down and break this area before I get into a position. But I can catch some temporary trades on the way down. But this is my ideal position and my ideal trade. And so if I'm scalping, let's look for a scalp position. anticipating that price is going to come down. And so I would get my tool. I'm going to place it below here because this is where I'm expecting price to come to. I would put my stop loss above these highs, which gives me a better stop loss of about 30 pips, which is typically what I like to see as far as a stop loss, about 25 to 30 pips. So I would put now remember, we're not getting in yet. We're waiting for price to come below this area and break and pull back and then start to trend down before we get into this trade. Then after I've established how much I'm willing to lose on this trade, I've said, okay, I'm willing to lose about 25 to 30 pips. I'm going to then identify my first target, which is that major key area that we identified on the higher time frame. Because this is also at my moving average, I would probably enter somewhere right here after price has broken this moving average. And so that brings, let's see, my ratio to, let's see, that's 18. Let's see, just gonna put it at about 18 pips. And so I need price for this trade to even make sense, because right now this trade doesn't make sense. We need our target to be at least a 2-to-1 risk to reward. I like to go for 3. And so we're going to move this down until, so right now we are risking 18 pips. Our ratio is over 2, so this is a decent trade. And so if I entered here at the moving average, which this is a 200 moving average. So if I entered here at this moving average, once price has broken and retested this zone, then I'm risking 18 pips with the goal of earning 43 pips, which is a really good risk to reward ratio. As price continues down, of course, you can move your stop loss to break even. This becomes a risk-free trade, and then you can continue to target these zones that we established on the higher time frames, which now takes that trade that you were initially scalping and takes it from a 2-to-1 risk to reward or a 3-to-1 risk to reward to a 9-to-1 risk to reward. Because remember, you initially only risked 18 pips, and you could have potentially earned 168. So that would be a amazing risk to reward ratio. And I just wanted to show you how starting on the higher time frames and working your way down is critical to your trading success, regardless on if you are a scalp trader or if you are a scalper. So we have the same analysis, the same zones, and we have 2 different trades. We have a swing trade, and we also have identified a scalp trade. What I like to do is leave my positions running. So I don't like to put in a hard stop loss. So I'm sorry, a hard take profit. So initially I was saying a 2-to-1 risk to reward ratio. Well, if I put in my take profit and I reach that 2-to-1 or 3-to-1 risk to reward ratio, my trade actually hits my target that I anticipated that it was, but price continues down, I now have to reevaluate my trade to see if it still makes sense for me to get into that trade, because my entry is now going to be in the middle of a zone. Instead, I could take off 50% of my trade at that point and then leave a running position open to continue to target these lower areas that I identified on the higher time frame. So say, for instance, you get into your trade at a 0.20. So you enter your trade at a 0.20 lot size, which means that initially your trade is you're risking $2 per pip. So once your trade gets to the area that you identified as a 2-to-1 or a 3-to-1 risk to reward ratio, you're going to close that trade, but you're not going to close the entire position. You're going to go into MetaTrader 4. You're going to edit that trade. So you're going to edit your lot size from a 0.20. You're going to change that to a 0.10. And so now you have just taken off 50% of your profits. And so you've taken off 50% of your profits. You have moved your stop loss into break even, which means that if the trade starts to go into the opposite direction, you are still in profit. You've taken off 50% of the profit. So you are not going to donate your money back to the market that you've already profited. And then you're leaving a runner open of 0.10 to continue down and catch the rest of this move if price decides that it's going to continue to come back down and test this area of support, which was identified as the trend line. And so you have taken off part of your profit, you've moved your stop loss into break even, and you have left a runner open so that you can continue to bank profits on that particular trade until the trend is exhausted. And so I hope that this video allowed you to get some clarity on how you are marking up and how you are analyzing your charts. Once you've done that, you're just basically waiting for you to get the signal based on your alerts that you set. You're waiting for one of those to be triggered. And you don't have to put in a buy limit. You can wait for the alert to be triggered. You can hop on the charts at that time. I analyze the charts at that time and see if it still makes sense for you to get into that trade. I only recommend the buy limits or the sell limits for people that are not going to be able to watch their trades and they are maybe working a 9-to-5 job and they want to still be able to trade and not, watch their charts as much as somebody that is a full-time trader like myself has the ability to do. So the buy limits, the sell limits, the buy orders, the buy stops and the sell stops are future trades that you can put in at advance and wait for price to trigger. Now, the great thing about that is if your analysis is wrong and price does not, say for instance, you are analyzing the charts and your analysis is different from mine. Maybe you think that price is going to come up here, so you want to enter into a buy. You can put in a buy limit, and that is telling your broker that you're expecting price to come up to this area, and when it does, you want to continue to catch profits to the upside. Now, the flip side of that would be that you are entering a buy stop. So price is down here, and you are telling your broker that price is down here, but I think that it's going to come up to here. So I want to enter into a buy once price reaches this area, and I want to continue to bank those profits on the way up. The opposite of that is a sell limit. So you are selling at a price where you are saying that price is down here, but I'm expecting it to come up to here. So I'm going to enter into that limit in advance. A buy stop is, a sell stop is you are entering into the trade and you are expecting price to come down and continue down. And so I didn't want to confuse you guys on that, but if you're going to be using the buy stops and the limits, you want to know what each one of those means. But TradingView, MetaTrader 4 is not going to let you enter those wrong. If you try to enter in a buy stop and that's not an area or a zone where a buy stop can be entered, it's not going to allow you to do that. So it's good to know what each one of those future orders mean and how you can leverage those in order to get into positions in advance when you are not watching the charts. But just make sure that you have analyzed the charts, you have identified how much you're willing to lose on that trade, and you've predetermined your risk before setting up that limit order. So you don't want to just set up a limit order without putting in your stop loss, because that can end really bad, especially if you are not looking at the charts. So it is very critical that you use those wisely and make sure that you are practicing proper risk management at all times, but especially if you are using those future orders that you are not going to be maintaining and watching. So I hope that this brought clarity to your analysis and that you are finding value in the community, regardless on if you are on your 30-day trial or if you are in the incubator or if you are in the chart mastery program, which is my VIP inner circle, where we actually trade together and you get access to one-on-one sessions with me, which I believe is the most valuable way to decrease the learning curve and to collapse time frames when it comes to learning this skill, because this is a high level skill set. It does require you to do your due diligence and put in your 10,000 hours. It's not something that you are going to be able to not be laser focused on learning. It is going to require you to do a massive amount of research and due diligence in order to become consistently profitable. There is a such thing as beginner's luck when you start to trade. And if you're not careful, you will hop into live markets and live accounts prematurely, like I did back in 2017, and you will lose a substantial amount of money. And a lot of times people lose a lot of money up front when it comes to trading, and they don't have the wherewithal or the tenacity to continue to learn after losing a substantial amount of money. But me, I lost so much money in the beginning of my trading journey that it is non-negotiable for me to continue to learn and master this skill so that I can get a return on my investment and recoup every dollar that I ever donated to the market. So that is my ultimate goal, and I will get rich or die trading. So I hope that you found value in this information that I have shared with you in this video. If you are not already a part of the incubator or the chart mastery program, I will be dropping the details to that information so that you can actually tap in with us and see if the community is a good fit for you or not before making any type of major investments. I know that we are currently in the middle of a recession, which is the reason why I like to put my money where my mouth is and give people the ability to tap into my community, see the type of value that I provide before making an investment, and not have buyer's remorse. I don't want to, get anybody's money that is going to regret making that investment with me. So that is the reason why I do things differently when it comes to people being able to tap into me, because my intellectual property is non-refundable. I want you to be happy with the investment that you're making if you decide to learn with me when it comes to trading and mastering the chart. So until next time, peace and profits. I look forward to celebrating your success and actually hanging out on the beaches of the world with you and sharing your success. I really want to build a community of women in particular that are becoming self-sufficient with this skill set and putting themselves in position where they can be in relationships because they want to be, not because they are financially in bondage to be. I want to put women in position where they don't have to trade time for money, and they don't have to appoint somebody else to raise their children. They can instead homeschool, like I've had the ability to be able to do over the last several years. I've taken my children out of public schools, and they have been homeschooled for about 3 years now. And so that is something that I'm very proud of, something that I really, want to help other women be able to accomplish, even though at times my kids think that they want to go to public school because they think that they are missing out on something. But we are about to start to have location freedom. So I'm going to start taking them to different places where they can learn and I can earn simultaneously without being tied to the house. So if that's something that you desire to do, definitely tap in. I do have resources when it comes to homeschooling and things like that I can help you in that area as well. So I like to look at myself as a cash flow consultant to help you be able to create cash flow in your home so that you can live a life that you do not need vacations from, that you do not have to trade your time to do things that do not create value in your life or that you do not find passion in. So I will see you guys on the next video. Until then, peace and profits.